Social media platform Reddit is reportedly eyeing March for its IPO. That's according to Reuters. The public debut would mark the first time for a big social media platform to go public in nearly 5 years. And the last time one did, it didn't even want to be called a social media platform. Is this a sign that deal activity is set to pick up? 108 companies went public last year, raising nearly $19.5 billion, according to Renaissance Capital. An improvement from 2022, but still weak compared to prior years. The M&A market has also struggled to gain momentum, 2023 marking the lowest number of deals closed in a decade. For more on this, let's turn to Ed Bagdasarian, who is the Intrepid Investment Banker CEO. Ed, great to have you here with us this morning. So help us break down your expectations coming off of 2022 and 2023 in both of these facets, and especially as we're hearing rumors that Reddit could potentially be tapping the public markets here.
Sure. Well, thank you for having me on your program, Brad. And yes, there's a lot of optimism for the M&A market in 2024. Listen, the headline news, as you've indicated, is that the M&A volume was down by 22%. But the real story is what's behind the numbers, Brad. I look at the M&A markets in 23 as a barbell. On the one side of the barbell, you had great companies that had good business models, and those had really all-time high investor interest, and valuations were very high. On the opposite side of the barbell were difficult, troubled businesses that had tough models and certainly troubled balance sheets. Those had to restructure, and oftentimes inside the bankruptcy system. Those also attracted a lot of interest from a lot of opportunistic buyers. In between those extremes, you had the average businesses. Those are the ones that typically experience more subdued buyer demand and lower valuations. I think you're going to see that activity pick up, and there's very good reason for optimism.
And Ed, digging a little bit deeper into that, when you expect this gradual return that we could see within the deal activity space here over the next several months, I guess sector-wise, are there any sectors where you expect to see maybe more favorability or more optimism when you compare it to some of the other classes that maybe still be overvalued or may not be attractive to investors, to corporate America right now?
Absolutely, Shana. So we're seeing a lot of activity in our healthcare group, specifically in the behavioral health, substance abuse businesses, home care supply, distribution businesses. We sold a company called Shield Healthcare to Henry Schein. We're unfortunately, it's a sign of the times, more and more people are having difficulties and mental health issues, and that's unfortunately a booming business. So we see a lot of investor interest in that. We're also seeing significant interest in food and beverage. Yesterday, we just closed a minority investment. We represented a company called Bloom, which is one of the preeminent suppliers of super green foods, and that received a $90 million investment for a 20% stake from an investor group that was led by Nutrabolt, which is a company that's owned by Dr. Pepper. We're also seeing a lot of activity in the software sector. Companies that have business models with recurring revenue models like SaaS are getting a lot of investor interest. We're also seeing strong investor interest in specialty industrials and everything that plays in the home shoring trend that we're seeing, the movement of the supply chains from Asia to the United States and in North America generally. Some of the tougher sectors that we're seeing is consumer discretionary. And even in those, you have pockets of sunshine. We have a group that specializes in beauty and personal care companies, and we have significant interest in some of these deals in that sector, the differentiated businesses with a direct-to-consumer strategy. And also companies that cater to enthusiastic, consumers and, passion-oriented businesses.
And just to jump in here, because we have our team over in Davos, Brian Sazi and Julie Hyman, they've been speaking with a number of CEOs, a number of policymakers. And one of the central themes, it seems, out of Davos this year is AI. A lot of that excitement that we saw play out in the market in 2023, exactly what that means in terms of the next leg or the second year for that excitement here for the markets. I'm curious, how are you evaluating those opportunities, and how are you separating some of the hype and some of the bubble that people have been talking about from some of the real use cases and attractive investment opportunities?
Sure. So we're looking at, again, we represent sellers on the mergers and acquisition side, Shana. And a lot of what we're seeing is interest in companies that are supporting this entire move to the AI, this revolution in AI. So those are the companies that provide the picks and shovels, if you will, companies that provide digital infrastructure or AI tools to enable the transition to an AI economy. So a lot of people are focused on the productivity gains that AI is promising to introduce.
Well, Ed Bagdasarian, we really appreciate your insight. Thank you so much for taking the time to join us here, CEO of Intrepid Investment Bankers. Thanks so much.
Pleasure to be here. Thank you.